Hello trading world. It's been a while since I've done a video, and with all the excitement coming up, I felt like this would be a good time to do a video to kind of shed some light on where we possibly may go and things that are happening right now in the market. I'm going to try to power through this video. My sinuses are giving me fits right now, but let's go to the market. All right, first thing that I want to talk about, something very important coming up tomorrow. We have a FOMC announcement at 2 p.m. tomorrow. This will set the tone for the rest of, for the next couple of weeks. The next thing that's floating around and about, a lot of people are talking about, and no matter how the talking heads try to fool you about it, inflation is here. It is here, and it looks to be here to stay for a while. The good and bad about that is that most of the good news has already been baked into the tape so far. So with the good news being baked in the tape, it sets the tone for a momentum change or reversal of trend. And that is definitely on the horizon here as we look at the SPY. There's been a lot going on in the SPY. It seemed to be a rocket ship at times, taking off straight up when you thought it was no more fuel left to go up, and it still somehow finds a way to go up. So in order to get clarity on this, despite being extended or overextended everywhere that matters and still being able to power up, let's go to the weekly chart to give us some clues and direction to actually what's going on. In this time when the lower time frames are all overextended and just seem to be so irrational, we have to come to the 30,000 foot view to actually see what's going on, and that's on the weekly chart. There are two keys on the weekly chart that we have to notice, or that I'm going to point out. The first thing on the weekly chart, I use a volume average, and so if you notice here, the volume is just pretty much fell off the map. It has dried up. This is one of the first things to notice when there's about to be a momentum shift. So you can see we're well below the average here. The next thing is, on this weekly chart, looking at the RSI, we need to cycle back up into this overbought area. As you can see right here, we're not quite in that overbought area. Back here with the red, you can see that we're in an overbought condition here, overbought condition here, overbought condition. So we need to get back up in that overbought condition again before we're able to start to break down. So with those two things being out of the way, and on the weekly chart, you kind of get an idea of why we're still floating up, with us having not cycled into overbought territory. This is the reason the lower time frames are just irrational and just keep going up when there's seems to be no reason to. It's because we're trying to cycle back into this overbought area on the weekly. Now that we've seen that, we can take it down the time frame and let's go to the daily. All right, now that we're on the daily chart, there are three keys that I want to point out on this daily chart that will give you clues as to where we're headed. Just like on the weekly, again, you'll see here on the volume average, volume is drying up. Again, one of the first things that you notice when there's about to be a momentum shift. Now here on the daily, on the RSI, we're just now reaching up into this overbought area, and we've been down here for a while. We've come from a pretty close to oversold area and reaching up into this overbought area. Now the thing to remember is that overbought, it's not a trigger, it's a condition. And what I mean by condition is I just pointed out to you on the weekly that we're still trying to cycle back into this overbought area on the weekly. And because this is a condition, we could stay up here in this overbought area for some time on the daily while we try to cycle on the weekly. So that's one of the things to look out for, and one of the reasons that a lot of the lower time frames are just so irrational right now. The other thing, or the third item that I want to point out, is the MACD. I do see a drop or correction coming, but if you start to short right now, it's a little early. And with the MACD still being vertical like this, that delta on the MACD still, there's a lot of room in between the leader line and the signal line. This tells you that it's too early to short and that we still have some way to go. So you want to see this kind of cross back over, but it's kind of a give and take, because if you wait for the actual cross, more than likely you're going to probably give up about 20 to 30 points here in price. But if you guess and jump too early and you're using options, you could burn up a lot of theta trying to guess and jump ahead, trying to catch that short. So that's one of the things where we are. and I usually use a screener to kind of figure out my entries. So a lot of times there are other indicators based on your comfortability in using other indicators that kind of give you clues or better timing on the rhythm in the market to give you that entry. So that's what we're going to be looking for over the next couple of days. And I'm kind of aiming at one of those days being very close, probably the 5th. Maybe even starting tomorrow, because in order for us to close the delta on that MACD, we're going to have to drop back down toward this 458 area in order to start to close the delta on that MACD. And once we drop down to 458, you'll probably see us bounce back, but only to a lower high, just to retest before we go ahead and actually start to roll over. So those are the things that I'm looking at. A large portion of that can happen tomorrow during the FOMC. And usually the FOMC meeting can cast a large shadow and make us move through a very large range. Usually, since I'm an intraday trader that takes advantage of some swings, the FOMC can play a big part in carving out some of those swing trades. And usually what will happen is that the FOMC will actually create the range for your next swing trade. Because a big portion of this I do expect to happen tomorrow right after the FOMC meeting, where we get a push down and then start to grind back up before we actually roll over. So that's why I'm saying that the 5th of November is probably going to be a big day. If we see possibly the 464 level, we're going to say somewhere okay. I'm expecting to see or visit to this 464 level at some point in time. So that's going to be right about here. So with the 464 level being somewhat of a target of mine, that's where I don't mind jumping in short. it's where I'm going to look for, we're probably going to grind up into that level before or during the FOMC. And it's quite possible that we can jump all the way to 460, 465. But for right now, I'm keying in on this 464 level for the FOMC. It just depends on how much we grind up going into the announcement. If we're already at 464 going into the announcement, then 465, 466 will be quite possible tomorrow. But if we continue to consolidate going into the meeting, and then we start that slow grind going into the meeting, 464 is an area of reaction to me where we're likely to hit, bounce off, and come back down toward the 458 area before we get us a retest and actually start to roll over. So that's the action I'm looking for over the next couple of days. So somewhere around this 460, 464 area or 465 is an area where I will be looking to take a swing short. And we're going to see how it plays out before and during the FOMC meeting. And what's going to happen tomorrow during the FOMC meeting is that this first and second move may happen so fast that you may not get a chance to grab it. And what I'll usually do, since this move will happen so fast, and depending on how far we grind up before the meeting, I'll go ahead and place an order to be hit on the chart even before the announcement. So that's my game plan of what I'm looking for. And the other thing that I want to warn you to be careful of is that that first move is usually a head fake on the FOMC. So if the first move is up, beware, because that is usually the head fake for a second move, and then we could possibly get a retest after that before we get the rollover. So that's what I'm looking for. Those are the key things that kind of give me insight and how I'll be planning out and watching the FOMC meeting. I wish you luck in your trading, and in all of this, please know your risk, and everything else should fall in place. Good luck in your trading. Have a great day.